So let's first understand why the entities might change their auditors. Entities are forcefully required to change their auditors because of regulatory requirements, like certain countries after specific number of years, 7 years for example, they have to change their auditors to a new auditor altogether. So that could be one of the requirement that they are changing the auditors, but there could be other instances which are not regulatory requirement but other reasons why entities change their auditors. So let's try to mention note down what are the reasons which could be leading to the entities changing their auditors. One of the most common reason could be due to fee. So the audit fees may not be acceptable, or it could be too high or not value for money, the worth of money. The fee that they are paying to the auditor seems to be very high for the work that the auditors have. Could be one of the primary reason why majorly mid-sized firms or mid-sized clients might change their auditors. If it is big four organizations, their fee would be very high. So mid-sized to upsize organizations, a bit more large-scale organization will be very difficult for them to afford them. So hence, they might change accordingly once they are facing some loss or anything. They are unable to pay the fees anymore, so they might change the auditor. The second reason could be the lack of fit anymore. Lack of fit anymore. Now, in this situation, what could happen is that the entity could grow. However, the firm is small. So the entity could grow from small size to it grown to now complex. So it can grow to large and complex. So because of which, the audit firm who are auditing this entity cannot cater to the needs of the client anymore because they have grown significantly. So they have to go for another auditor. That could be one of the reasons, like they are not fit anymore because the firm is a small or mid-sized firm. Now the entity but have grown to a larger company or a huge company where they do not, the auditors do not have enough team to support them. Could be another reason. The next one is that the audit firm may not seek re-election or resign. So audit firm may resign or not seek re-election. Okay. Now, in this situation, the reason could be that multiple reasons could emerge. One is that the auditor can have independence issues. So there could be independence issues. So the partner or the team members who are working for this client have independence issues with the auditor. That could be one of the reasons. There could be conflict of interest. Conflict of interest. There could be a case of conflict of interest with another client, right? With another client. So we got another client and they are competitors. They don't want us to do another entity with the same industry. Could be a situation, right? Or they may just be a routine need to rotate or retender the audit due to legal or regulatory requirements. So the other situation could be legal or regulatory requirements. This could be another reason. And finally, there could be conflict of relationship. Conflict of relationship. Conflict of relationship between the auditor and the client. Auditor and client. Which might result in the client actually removing the auditor. Like they are not able to work with the auditor. The auditor seems to be not cohesive, or they are not understanding the pain of the client and things like that. And the client is saying that, we are removing you as an auditor. We don't want you to be our auditor for the next year. We are giving the services to someone else. That could be another reason. There could be working relationship issues between the client and the auditor. So these are the common reasons why entities could change their auditors compared to the last year to the current year audit. So now when an auditor wants to when an entity wants to change their auditors, now the entity will be open for other auditors to give a proposal for their own audit services. So things that auditors have to take care of before they go and advertise or create publicity and obtain professional appointments with clients. These are the codes that ACCA says that these are the things that you need to comply with before you do certain kind of advertisements. When it comes to advertisements and publicity, the audit firms are allowed to advertise, so that's a good point. However, the ACCA code states that our promotional material shall not reflect adversely on the professional ACCA or the professional accountancy or the accountancy profession. So they cannot do any kind of promotional activity that might cause certain kind of harm to the ACCA profession. So the advertisements and promotional material should not bring ACCA into any kind of dispute or discredit the professional accountant, firm or accountancy profession. So you should not do any kind of advertisements which are contradictory or that can bring certain unethical practices into place, etc. So it has to be in a fair manner, and you just need to publicize what the services you are providing, but don't try to glorify and make it a more of an advertisement which these product-based company does. No, that cannot be done. It cannot discredit the services offered by others. Like, you cannot say that I am the best in town. No, if you're saying that you're the best in town, you have to tell how and showcase the evidence that you are in the best in town. You cannot say that for a cheapest price possible, you fix the price. Like those kind of ads and all you cannot give, right? It cannot be misleading by any directly or indirectly. Let's say, for example, all in one package. You might be providing audit services alone, and when you say all in one package, it sounds like you are providing other services as well. So that is misleading. If there are certain services you are not providing, you cannot show that you are providing the services just to get some clients. You cannot do that. And follow the regulatory and legislative requirements of the UK advertising standards of code. You are required to follow them. So this is the common rules and regulations that any ACCA member should follow or firm should follow when they are advertising their services. Now, when you are advertising, you will spend money, which means you will have an advertising fees. You have a cost for advertisement. So it is difficult to explain the services represented by a single fee in context of an advertisement, and confusion may arise. There could be a confusion as to what the potential client might expect to receive in return for a fee. So if the audit services they are advertising in television, they are giving ads with a good brand ambassador and all, the clients who are going for the audit services will get confused. They'll be like, what are they charging? Will they charge us more? What are they expect to get in return? What we are expect to get in return when you are advertising this much? So the advertisement are good, but it is risky. It's risky. And it's also very careful that you do not So the next one is advertising fees. So in this, the ACCA code says that when you are promoting your services, do not try to put the fees, because the fees may not be the same for all the clients. The fees may depend upon the size, nature, risk of the client that you are going to audit. So if you put one single fee, the client may get confused, like what they might going to expect, what they can expect in return for the fee they're going to pay. So it's a tax services at 1,000 rupees. Now, for a client, let's say who are a multinational client, can you give tax services at 1,000 rupees? No, it's not possible, right? You might be giving a tax services for some IT returns or some individuals. What if there is an individual who is a high net worth individual and he has a complications, lot of deductions and things like that? So how will you claim only 1,000 rupees for it from him? It's not going to work. So because the services we are in the services industry, and services depends upon the work that we do, like depends upon how much work we have to do, and the work we are going to do is depends upon the client we are onboarding. So advertising one single fee for the services that you're going to offer may sound risky. It might be risky. So it's better to stay away from it, to refer to mention the fees, or if you mention the fees, then it can be risky when you're doing an advertisement. If you're doing a lengthier advertisements where reference is made to the fees in promotional material, the basis on which the fees are calculated should be clearly stated. So if you're going to make a longer advertisement, or you're going to do promotional activity in an ad for 1 minute, 2 minutes, then you're going to mention in that ad what are the fees that you have charging, then you should clearly mention how the fees are calculated. What's the basis of the fees? Like what all includes in that fees? Those kind of information should be given. But overall, it's very important to remember that advertising fee is greatest care should be taken, as there could be misleading. It could be misleading to the client. And if they are comparing with the competitors, definitely it could be a lot of misleading. So what if you mention a low fees and the competitor is they are giving right now is of high? So they might expect, oh, you know what? The person who's advertising now is giving only low fees. Let's go to him. But when you actually go and enroll and start asking questions, start giving client documentations, KYC, you might be required to charge a higher fees. Now that is a conflict because you misled them. You said that you are cheaper, but now you are not, because the actual work, the fees that you have to pay for the actual work that you have with the client might be heavier. So any fees that you are going to represent, it should be factual and you should be able to justify it. And you should not make any unflattering references. Like you cannot mention the competitors' fees, the lowest in the town, lowest fees in the town. Now you are referring to competitors that your competitors are costlier. And it is appropriate to advertise free consultation to discuss the fee issue. So you can say that, book a free consultation, fix an appointment for free consultation, that you are allowed. But this free consultation will allow fees to be explained, thus avoiding the risk of confusion. So the easier ways to that, you market your services, what are you offering, what are the firm you have, what all you have in your firm. And when it comes to fees, just tell them that book an appointment with us for a consultation. That's it. So after you advertise, then the next one, what you do is tender. Tender means you reach out to the clients. You give them an invitation or give a proposal to the client, to a prospective client, talking about your services that you have and what are the fees and structures, etc. That's what is called as tendering, or giving a proposal for work. So a firm put together a tender either in response to an open invitation to the tender, or if it has been approached by a prospective client. So maybe a client approached you, the auditor, after looking at the advertisements, or they might, the client might be putting out an open tender in newspapers or in their websites that we are looking for an audit firm. So if there is an open invitation, or the client reached out to you, or prospective client reached out to you to ask you to give a tender or a proposal, you can send out the proposal. And the tender will have to be sent out after the partner have decided that they are capable of doing the work for a reasonable fee. That's very important. So even if before you send out the tender, the partner have to be competent enough, capable enough to do the work for the client. So if I'm going to audit a bank, if I'm not have any kind of experience auditing a bank, then it's better not to give the tender at all. Because what if I give a tender and it's cheaper and I get the client, and then I'll be stuck in between, and the client will be unhappy, and I will lose the client. So to ensure that such things or such issues does not happen, it's better that you have enough experience, or you have decided that you are capable of doing the work for a reasonable fee, and only then you approach the client. When an audit firm is approached by a prospective client, the first question here to ask itself is whether or not it wants to work. So if a client approaches an audit firm, the first question the firm will ask themselves is whether they want to work for the client or not. The reason why you will ask this question is because of very simple answer. The reason is because whether you are capable enough, you have the competency. The third thing, you have the skill sets, etc. And the fourth thing is also the integrity of the client. So there could be a client, who are unable to get an audit firm, and because of that, they keep on, reaching out to a lot of audit firms, and nobody's accepting them. So if the integrity of the client is not good, then it's better to be safe and not sorry. So avoid working with such clients. So the question that you're trying to answer, whether you want to work for the client, is do they want to work? Then what all things you need to look out for? So the risk attaching to the client must be considered. Like before you accept a client, what are the risks attached to the client? That has to be considered. So the audit firm will ask themselves these 9 questions. These 9 questions can help you understand what are the risks that will be associated with a new client. Why has the approach arisen? First year of the audit desired to change the auditors. Like why are they changing the auditors now and in the first year of audit, or is there a desire to change the auditors? Like why are they trying approach us? Like what are the reason why they're approaching us? Is it because it's a first year client, or they want to change the auditors? Because if it's a first year client, then the risk is less. But if they want to change the auditors, why did the auditors change? What was the reason behind the previous auditors have been removed or resigned and new auditors have been hired? What are the future plans of the entity? Are they in a growth mode, or are they surviving, or are they going to change their operations, etc.? What the client requires from the audit firm, like audit, number of visits, tax world, etc. Can the firm afford to spend time on the proposal? Can the firm afford to spend time on the proposal? Do you have enough time to spend on the proposal? Do you have enough time with you? Do you have enough time to work on the proposal? Do you have time to work for the auditor? Do you have enough staff to work for the auditor, etc.? Does the proposed timetable for the work fit the current work plan? When you are taking a new client, the audits might have to be simultaneously completed for all the firms, or you can pick up the time according to your convenience, but at the same time it has to be completed on before a specific deadline. So whether the timetable works for you or not, you have to discuss that with your client, and you need to consider what are the correct what are the current audits that you have, and whether it is working for you or not. Whether you will be able to accommodate a new audit along with your current work or not is something that you need to consider. Does the firm have suitable personnel available? Like, do you have people with you, like managers, staff, seniors? Do you have them to audit? Where will the work be performed, and is it accessible or cost effective? Where the work will be performed? Will it be performed on the location, or will it be an online mode, or will it be an offline mode, or will it be a cost effective? That also you need to consider. Are non-specialist skills necessary? Like other than auditing aspects, other than auditing or accounting, are other skills necessary? Will the staff need further training to do work, or if so, what is the cost of further training? Do the existing staff need additional training to go through? If so, then what is the cost of that? Do we need to spend additional cost, etc.? Do we need to send them for additional cost, etc.? That's something that you need to consider. So these are the 9 questions that the auditor will ask themselves before they accept even send a proposal to the client. So the proposal that you're going to send, what should be the content of the proposal? Like what should all include in the content? Assuming a firm is happy that it can manage the risk above. So whatever risk we discussed, and we have answered all the questions, and we are happy that we can go ahead, then they need to create a basic format of the tender proposal and send out to the client. Now there will be a basic format which will contain the circumstances and the prospective client's requirements. What are the objective that it's going to fulfill, like what's the services is all about. And also they need to demonstrate that it has understood the unique features and requirements of the business and can meet those. Whatever the client, what they're asking, the tender should include the requirements of the business, as well as ensure that the firm has understood the requirements of the business, and that should be documented in the proposal. So the following matters are very much important that need to be covered. Firstly, the fee details and of how it has been calculated. Like how the fee that you are calculating, how it has been calculated, that should be included. And an assessment of the requirements of the prospective client. Like you need to note down what are the requirements of the prospective client. Do they need audit services? Do they need assurance services? Do they need something else? What are the requirements do they need? That has to be noted down. An outline of how the firm proposes to address those requirements for the fee. Like if they're quoting a fee of let's say £100,000, you first look at the requirements, whether those requirements are can be included for the fee, or you have to increase the fee, or you have to come down to some other requirements you might not be able to fulfill or not. Those things have to be mentioned. What are the assumptions will be made, like deadlines, availability of the information. Like you should say, okay, the deadlines we are expecting is to complete this work is 1 month, 2 months, provided the information are provided to us on a timely basis. So those are an assumption. So those assumptions should be included. The proposed approach for the engagement. What kind of approach you're going to take? Is it going to be controls reliance approach? Do the company have enough controls so that they can say, oh, you know what, it's going to be a control reliance approach, provided we test the controls. An outline of the firm and the staff involved. Like you can give out who will be the partner, who will be the staff, who will be the senior, and what are their experiences, what kind of audits they have done before, etc. So that's what is called as tender or proposal document. Now, if the tender is submitted to an existing client, some of the details will be unnecessary. Like, for example, outline of the firm and the staff. Right? They already know them. It need not be mentioned. And the requirements, you already know what is the requirement. It's a continuation. So in which you're sending it, so you don't need to mention the requirements in a detailed manner. So those things you can remove. The reason why we are mentioning this in a format is because it could be comparable. Like the client, what they will do is they'll take your tender, the firm that is submitting, and compare it with other competitors and come to a conclusion. The next one is the criteria which might be used to evaluate the tender. As per the research, it has shown that proposals are often won on the quality of services being offered, value for money, and the chemistry with the client, rather than simply the fees. So it's not just about the fees, it's also other factors that could include. The other factors could be the location, like they want the auditors to be in the same location that the firm's head office is, the client's head office is. Personal knowledge of the partners and the staff. If the partner and staff are knowledgeable enough, they have met the partners and they are, interacted with the partners and they are good, carrying a good amount of knowledge, then definitely they have an upper hand. Prior experience of the industry of the similar size. If the partner is coming from a situation where he has been auditing for a past long time and has worked with these industries, then definitely it's a win situation. Matching the services offered to the specific needs of the business. Like whatever their needs are they matching to the business needs, are they matching to the proposal that has been submitted? Like the requirements, are they met? Have they included all the requirements, etc. Communication, including prior agreement on the fees before any additional work is undertaken. When they say the proposal document, they are mentioning the fees, they have to come to an agreement. So only then, they will go for the next step. Development of an effective relationship with the client and the key members of the audit team. So even before they kind of, accept the client, they talk to each other. The partner and the audit client talk to each other, come to a consortium and come to a good relationship, and then only they actually take up the next step to accept the client. Now there is a specific requirement that says for UK's, as per the UK Companies Act. So the UK's Companies Act 2006 requires requirements for tendering says that some companies to put audit out to tender after 10 years with mandatory rotation after 20 years. So the Companies Act says that some companies have to put the audit out to the tender after 10 years. So after 10 audit, they have to, request for tender of the audit services. So if I am a company and my company have been audited by EY. Now, once EY has been auditing me for 10 years, now I have to put out for a tender. Like I have to reach out to other players as well. EY can also, reclaim the tender. They can also give a proposal. But at the same time, the company might be reaching out to other auditors as well, like Deloitte, KPMG. Everybody can give a proposal. So that is very much required. So after auditing 10 years, they have to give out for a tender. Like kind of like you're giving opportunity to others, and if these people have done enough, you want to move out, it's better to move out, so that the familiarity threat can be reduced. But there is a mandatory rotation that after 20 years, you cannot audit, the same firm cannot audit, you have to move out. That's the requirement. Like it's a Companies Act, it is a requirement for certain companies, right? Like small companies as well, it is required. But Under the UK's Act 2006, for listed companies, an auditor must always submit a statement of circumstances when they cease to be an auditor. So if you are having a listed company, then an auditor must give statement of circumstances even if it's not any kind of issue, it's just a mandatory rotation. Then that mandatory rotation have to be mentioned in the statement of circumstances and submitted to the regulators. It is required. So even when there are no matters, like there are no conflicts, there are no issues, it has to be brought to the attention of the members and the creditors and everyone for the public limited company that they are changing the auditor because of a mandatory rotation. That can be the case. In case of a private company, the auditor does not need to submit a statement if they are leaving because the term of office have come to an end. If they are leaving before this, then a statement must be submitted unless the reasons for leaving are exempt reasons. And there is nothing that needs to be communicated. So if it's a public limited company, even if it is a normal reason like change of auditor, mandatory rotation, things like that, you have to mention it. So even if it is a normal reasons, you have to give a statement of circumstance to the stock exchanges and to the regulators, etc. But if it's for a private limited company, which is not public and it's unlisted, in that case, if it's a normal service, normal rotation, then you don't need to give a statement. Like for example, it's a mandatory rotation. Like after 7 years or 8 years, we are moving out. 10 years, we are moving on because it's required to be mandated. So if it's a normal reasons, then you don't have to mention it. But if there are any other reasons, like you had 5 years left for the mandatory rotation and you exited, then that's called for certain reasons. So why you exited? Like take the case of Byju's. Like Byju's would have served for another 5 to 6 years for Deloitte would have served for another 5 to 6 years for Byju's. But they resigned in the second year of audit or third year of audit. I don't exactly know the number, but they resigned. Now when they resigned, they send the statement, right? This is the reason why we are saying. So if it was normal reasons, like after 7 years after mandatory rotation, Deloitte had resigned, they would not have sent a statement. But if it was not for a normal reason, since Byju's is a private company, but of course it's a public interest entity, but since even though it is a private limited company, it's not listed, the Deloitte came up with their circumstances that these are the reasons why we are resigning. And those reasons were conflicting nature and it was really, certain questionable reasons, of course. And there could be other reasons like exempt reasons. Like auditor is ceasing to practice as an auditor, like he's resigning. The auditor is stopping their services. Or the company is exempted from audit. They were private company, and they reduce their operations. They have sold certain departments of theirs, and now it's an exempt company as a small company. And there is nothing to be communicated. You don't have anything special to communicate. Then also you don't have to give out the reasons. So the next one is in relation to the fees. So in fees, the ACCA's Code of Ethics and Conduct states that the fee should be fair and reasonable. It should be a fair and reasonable fees that they can fix. They recommended that the basis of charging fee should be mentioned in the engagement letter. So when when they are fixing a fees, the basis of the calculation should be mentioned in the tender. And the fee information should be given in the tender, but when they go ahead for an engagement letter, they should mention in detail what are the charging of fees, how they are calculating and all those stuff. ACCA very particularly says that the fee should not be charged on a contingency basis, percentage or similar basis, say where course of action is generally accepted practice for certain specialized work. So contingency fees are percentage basis fees. Let's say for example 10% of the profits of the company, or 20% if the profits of the company increases. That's a contingency fees. Or profit sharing basis. Those kind of fees cannot be accepted. It's not correct. That's not appropriate for those kind of fees to be accepted. ACCA also says that commission which are paid and received, which are the referral fees, are definitely accepted, right, as a result of recommendations from and to the clients respectively can be accepted as long as adequate safeguards exist. So as long as there are safeguards which exist with respect to the commission paid as well as received. So if let's say for example there is a client and client referred you to someone else. Now, in that case, the client might ask a commission from you. He might say, you know what, you give me a commission, man, because I referred you to someone. That's a commission payment. So when it comes to the commission that we are going to receive, what we need to be careful about is that, let us say in terms of commission received, let us say we are the audit firm. So we are the audit firm and we have a client called as client A. Now this client A is providing a specific services. Okay, they are into let's say printing services, printing. Now we have another client who is a client B. Now client B has a requirement that they need to print a few brochures. Okay, just simple. So now we know that they need this requirement. So they talk to us and they needed this requirement. So what do? We'll tell the client B that, you know what? You can meet client A who are giving you the printing services. Now we are offering client A a business. For that, what we will do? We will take commission from client B. Now this is not restricted. Sorry, this is not disallowed. But at the same time, if you're doing this have to be with adequate safeguard, like which means full disclosure. You need to inform the client A and client B that you are going to get commission from these services by referring them. That is very much important. Now, fee disputes may arise when the client believes that the fee charged is excessive. If a firm is to issue a fee note which is higher than the previous fees, it's a good practice to explain the reasons for the variation. So if you are going to increase the fees compared to the last year, you need to explain the reason for the increase. Assuming there is no dramatic change in the size and complexity of an audit client, it is reasonable to expect that the audit fee shall fall over the time. So if the complexity remains the same, nor there is no major issues that the client is expecting, then technically the fee should fall over the period of time. It should gradually reduce. But if not, then definitely if it is increasing, then the reasons should be very clearly mentioned. Some reasons why this would be the case are as follows. Like why the audit fees would gradually fall over time are all follow. Because firstly, the time spent by the auditor would reduce because they're going to get more efficient because they know that the business in and out. So they know full information about the business. So it's going to be easier for them. Second, the client system and procedures should be fully documented in the first year. So their system regarding their process, their procedures, everything should be documented in the first year. This is very time consuming. It's not going to be easy. The third, the first year of audit is generally high risk due to lack of knowledge of the business. The firm is likely to respond to the risk by assigning more senior staff to the audit. Then in subsequent years, the risk will fall and more junior and therefore cheaper staff can be assigned to the audit. That's the third aspect. So initially it will be, the fee could be high risk because they don't know the client, the firm doesn't know them, etc. Then gradually it will fall down and it will be in such a case that they will be more easier to approach and the fees will definitely reduce gradually over the period of time. Now there is a term that is called as lowballing. Lowballing refers to the practice of setting line initial audit fee low in order to win the client. So let's say I'm competing with a high competitive market. What do? I would reduce the fee significantly. The moment I reduce the fee significantly, it's good because I might win the client. But what if I'll be able to sustain? If I reduce the fees initially in the first year and face a lot of losses because of supporting them, in the next year, if I increase, I will lose the credibility of the client. So the ACCA has come up with guidance that it's not improper to secure work by quoting a lower fee. So you can quote a lower fee. It's upon you. You are giving the service. So you are cheaper. It's up to you. But the client has not to be misled. Which means if the client is a risky client, if the client has more work, don't tell them that you don't have work. We don't have much work. So we will quote a lower fees. So, and therefore, if you have more work, the work cannot be compromised because it will affect the quality, and the quality which the regulators are keeping an eye on you. And further, ACCA code also discuss the fee levels. There are ethical implications of this. What are they? Because the fees is set low, the audit firm needs to retain the client for a number of years. So the moment you try to retain the number of years, because initially you would have incurred losses because you lowballed, there could be independence compromisation because there could be self-interest threat. Right? So just imagine, I want the client to come to me anytime. Like I want the client to come to me for any cost. So I will reduce the fee significantly. Now, next year the question is, can I increase the fees or not? Because if I increase the fees, what if the client goes to some other firm? So I will try to retain the client as much as possible. The moment you are interested to retain the client as much as possible, you will create a self-interest threat due to independence issues. The second point is professional competence and due care may not be applied if the fees is so low, because you cannot involve high paying employees for this particular engagement because they'll charge heavy. So you will try to compromise it. You might not run this audit with 2-3 people. You will run it with one person. This can be seen as unprofessional because it means that smaller practices cannot compete. Like if a big firm reduces the fee significantly, then a mid-sized firms will not be able to compete. They have to reduce, somehow reduce the fees. For the big firm, it is okay because they will have some clients which are low cost, some clients which are paying heavily, so their profits will be compensated. What about for medium clients where there are only less number of clients? If they start lowballing, what will happen? The smaller client, the mid-sized firms will not be able to compromise on their profits. And if they start compromising on their profits, what happens? They will not be able to deliver the quality. So those things will affect it. So these are the 3 things with respect to the fee levels, which are the ethical implications. This is very important because maybe in a scenario you are given a situation that the firm is planning to quote this much amount of fees, but the market rate is comparatively 30%, 40% higher. So that's a lowballing. So you need to quote the term lowballing and explain the term lowballing to the examiner while you're writing the answer for that scenario. So you advertised, you gave a tender, you gave a proposal, you fixed the fees, fixated the fees, and etc. The next one is acceptance and continuance. There are a number of issues the auditor should consider when the tender proposal has been accepted by a prospective client. Like once the proposal has been accepted, there are a few issues that you need to consider. Does the firm have necessary technical competence to perform the work? Like you accepted the proposal, now the real work will start. But when the real work starts, do you have the competence? You somehow gave the proposal because it's free of cost. Giving a proposal at no cost. You just gave the proposal. The client thought that, okay, you know what, you guys are good, so let's accept it. Now the question is, do you have enough team on board who have the competence to do the work? Do you have sufficient resources in the first place itself? Forget the competence. Do you have people with you? Are they independent? Do they have any ethical issues? Has the firm considered the risk associated with the new clients? What about money laundering? What if they are politically exposed person? What will happen there? Has the auditor obtained references of the directors? Like, have you gone to looked at the directors and try to understand, take references of the directors to see if their integrity, to question their integrity? Professional clearance, it becomes very important. You need to obtain clearance, pre-clearance or professional clearance from the previous auditors. So if we have if there is a client and it's a new client and we are going to audit that client. Now I need to reach out to, if I'm going to audit that client, I need to reach out to them, to their previous auditors, right? So let me explain that in a simple way. So let us say that we have an audit firm, let's say for example, EY. Now EY is going to audit a client called as client A. Now this is a new client for them. This is a new client. Okay. And this audit services is going to be for 2023. Let's say for example, for year ended 2023. Okay. Now in previous year, the audit was conducted by KPMG. So previous year, the audit was conducted by KPMG, which means for 2022, the audit was conducted for the year ended 2022, the audit was conducted by KPMG. Now, EY, if they want to onboard client A, they need to obtain pre-clearance from KPMG. They need to obtain the pre-clearance. They need to obtain the pre-clearance from KPMG. Pre-clearance or professional clearance from KPMG. Okay. Now, when we have to obtain the professional clearance, it's not going to be a simple way. What they need to do? EY will have to reach out to the client A, ask them permission that they need to talk to the KPMG, your previous auditor. The client A will give them permission. Once the client A gives permission, then EY will reach out to KPMG. Now, what will KPMG do? KPMG cannot respond immediately. KPMG have to ask permission from the client to speak to EY. So only after the permission, KPMG can speak to EY. Now, what if the client does not give permission either to EY or to KPMG to speak to each other? Then there is something wrong. Why if the client A does not have anything to hide, why are they not giving clearance? Something fishy. So that have to be looked upon. So that is called as professional clearance, and professional clearance have to be obtained. You need to obtain the professional clearance before you accept the client. You need to look at the ethical constraints, independence issues even before you accept the client, or even before you start the audit. You need to look at the independence issues. Independence have to be checked. You need to look at the terms of the engagement and agree the terms of the engagement prior to accepting the client. Like whatever the terms is, you agreed, and only after that you actually mention that in your engagement letter and get a signing of the engagement letter. See, this is not the exhaustive list, but there are many related questions to the tendering stage, like why the firm might be offered engagement. Right? Why the firm might be offered an engagement that it has submitted for a tender for, but then choose not to proceed with the engagement. Consider in the context of a graduate looking for work. They might submit a number of job applications. It might lead to interviews as well. However, in time, factors may have emerged that the graduate is less keen to work. And if a number of options are available, the graduate may decide to go with the best one that fits their circumstances at that time. So similarly, a client might reach out to multiple people, and gradually they will find out one person, one firm which suits their interest. So they will reach out to that person, firm, and accept the client. So even if we submit a tender, we might, or after talking to the client, we do whatever we can, and maybe the firm might not be interested to proceed with the engagement, or the client might not be interested to proceed with the engagement. It's better not to, marry itself if you feel that it's going to end up in divorce, like if there is no harmony in the marriage. So similarly, it's better not to take up such client if you feel that there is not going to be any kind of good working relationship with the client, or there is some troubles in the engagement. It's better not to take such engagements up. So you have accepted the client and now you want to proceed, like it's the last stage, that is accepting the terms of audit engagements, which means you put up all the conditions, all the responsibilities into something that is called as an engagement letter. So ISA 210 specifically talks about agreeing the terms of audit engagements, and they talk about best practices concern this issue. Why? Because as I told you, there is a high risk involved for the auditor. So it's better to be safe than sorry. So before accepting or agreeing the terms of the engagement, before you even agree the terms of the engagement, it's very important that the objective of the auditor concept or continue the engagement only when the which has been performed has been agreed upon, where you establish a preconditions of the audit. So even before you accept a client, the preconditions of the audit should exist. It is very important to include a preconditions of the audit, and the preconditions of the audit are required to be present. Second, confirming that there is a common understanding between the auditor and the management, where appropriate with those charged with governance, with respect to the terms of the engagement. So in terms of the preconditions of the audit, what are preconditions of the audit? The precondition of the audit is the use by management of an acceptable framework in preparation of the financial statement, agreement of management where appropriate those charged with governance to premise on which audit is conducted. So auditor, what they will do is he will assess whether the applicable framework is acceptable to them. Firstly, like what kind of financial reporting framework the client is using. Is it IFRS? Is it Indian accounting standards? Is it something relating to UK standards, or is it something else? And whether that standard is acceptable to the audit firm by which they are preparing the financial statement, because as per the jurisdiction they might not be allowed, or they might have to do something else. So those kind of things firstly have to be accepted. Second, ensuring fair presentation of the financial statement, sufficient internal controls to address the material misstatement due to fraud or error. So next step is to ensure that there is a fair presentation of the financial statement. Second step is that when it comes to precondition, you're going to check whether there is sufficient internal controls which are present, which addresses the material misstatement due to fraud or error. The third, the auditor has been provided with access to all information for fair opinion. So first is to accept the applicable financial reporting framework of the client. Second, whether the company, the entity have strong internal controls and they have a mindset to avoid material misstatement in the financial statement. And third, whether they accept to provide all kind of evidences that require for the audit opinion. These three things are called as preconditions of the audit. And all of those preconditions of the audit will be detailedly mentioned in the engagement letter. So I want you to go and read the contents of an engagement letter, because it's going to give you an idea. I'm also put the contents of an engagement letter. I'll also put a sample engagement letter in the app. Just read it, just go through it and read it and understand it. If any of these conditions do not exist, then auditor should not accept the client. Like the framework is unacceptable, there is those charged with governance, there is limitations of the scope of the work, or there could be a lot of material misstatement, there is a lot of issues, client might not give us data properly, then it's better not to accept it. Like only if the management accepts the precondition of the audit, only then and the precondition exists that the financial reporting framework are applicable and it is appropriate, the management does all the work to ensure that there are no material misstatements in the financial statement, where their job is to prevent their material misstatements and detect the material misstatements. And third, they provide all the necessary data. If they are not, then you might have to not accept the client. In recurring or continuing audit, the auditor must assess whether the circumstances have changed, that the engagement terms needs to be changed. So firstly, they will print out a master agreement which will contain engagement letter, which will contain for a specific period of term, maybe a long term, 5 years, 6 years, etc. Then every year there's going to be new engagement letter which will precise the terms for that particular year, because every year the requirement might change, right? It's for the current year. So last year engagement term we cannot use it. So first we will prepare a master agreement that a client and an auditor is going to join services and is going to audit for this particular client, and it will be mentioned what is the expected number of terms and things like that. Then every year the new engagement letter will be drafted for that specific period, like mentioning which year of audited financial statements we are looking for, what will be the controls, all those things will be mentioned every year. So the terms might change every year, so that's need to be updated. And finally, there are certain descriptions of practicing firms. Members of ACCA may be either associate or fellow members. So associate members, I'll talk about fellow members. Any ACCA who have completed their examinations will be called as an ACCA affiliate. So anyone who have completed their ACCA examination, which is their 13 papers. If you have completed your 13 papers, you will be called as your ACCA affiliate. You written and passed the paper, or you got exempted, both are almost same. So you completed 13 papers, you are called as an affiliate. After 3 years of work experience, you will become an associate member. So this is affiliate. So here you will be ACCA affiliate, ACCA affiliate plus 3 years. So 3 years. So ACCA affiliate plus 3 years, you will be an ACCA member. Okay. ACCA member with 5 years. So if you are an ACCA member and you have 5 years of work experience or more than 5 years of work experience, relevant work experience, you will be called as a fellow member. If you are an associate member, you will be written as ACCA. If you are a fellow member, you will be written as FCCA. A firm may describe itself as a firm of chartered accountants where at least half of the partners are ACCA members. At least half the partners should be ACCA members. So you can call your firm as chartered certified accountants where 50% of your members should be ACCA members. Let us say you are having a firm where 2 of them are ACCA members, 3 of them are CPA members, 1 is an Indian chartered accountant. Then you cannot call yourself certified members because there are total 6 people and only 2 are ACCA members. And those partners hold at least 51% of the voting right under the partnership agreement. So at least half of the members means if there are 6 partners and 3 of them are ACCA members, but at the same time 3 of them together should have 51% voting right. Then only it will become half, right? If 3 partners are there, partner A, let's say holds, okay, partner A, he's an ACCA member, he holds 20%. Let's say he holds 20%. Okay. So partner A holds 20%. Then we have partner B who holds 20%. So total became 40%. Now we have a partner C who is also an ACCA member, but he holds only 5%. He holds only 5%. So total became how much? 45%. So now because of this, you cannot call yourself as chartered certified accountants. If you are a chartered certified accountant, then you may use ACCA logo in your stationery and your website. Which means if your firm has at least 50 members, 50% of the members with the voting right are ACCA members, then you can use the ACCA logo. A firm who holds firm's auditing certificate from ACCA may describe itself as registered auditors, and a firm which all partners are chartered certified accountants may use the description members of the Association of Chartered Certified Accountants. So if a firm holds for auditing certificate from ACCA, if a particular firm has a practicing certificate, it may be called as a registered auditors. But if there is a firm where all of its partners, not just 50% like we talked about, but all of its partners are certified associate of chartered certified accountants, if they are ACCAs, then they can call themselves as members of Association of Chartered Certified Accountants. If there are only 51%, they can call themselves as chartered certified accountants. You cannot call as members of Association of Chartered Certified Accountants if you are only 50% of the partners are ACCAs. But if less than 51% of the partners are ACCAs, then you cannot call yourself chartered certified. However, a firm must not use this term as part of its registered practice name. That you cannot say that you cannot put your firm's name as members of Association of Chartered Certified Accountants. Or you cannot put that in your registered practice name. Your registered practice name can be something else. And you can call yourself as your ABC firm, members of the Association of Chartered Accountants. So your practicing name should be different. But you have a salutation where you can call yourself as members of Chartered Certified Accountants. That's what is required. Okay. So it's a pretty light topic, nothing but to talk about, but think in terms of connecting this particular chapter with ethics as well, which we learned in chapter 2 and 3. Then you will have a better question to frame.